The Japanese yen weakened broadly in the Asian session today as Japan escaped from direct criticism from the G20 on recent policies that drove the sharp currency depreciation. It's reported that Japan received no censure during the meeting and its policies were considered supporting the economy rather than intentional devaluation. The G20's statement just mentioned a pledge not to target the exchange rates for competitive purposes. Outgoing Bank of Japan Governor Shirakawa reiterated that the bank's measures have been and will remain targeted at achieving a robust economy through stable prices, and the G20 statement is absolutely in the same spirit as our monetary policy. It's believed that while Japan might refrain from talking about the currency, it would continue to pursue aggressive fiscal and monetary easing ahead, in particular after the new Bank of Japan governor comes on board. Japanese Prime Minister Abe said today that raising the inflation target to 2% is already producing results, with rising inflation expectations. Abe urged continuing monetary easing until the target is reached. Meanwhile, he cautiously said that, "I'm not in a position to comment on an appropriate currency level. Basically, our policies are not aimed at weakening the yen." Nonetheless, he admitted that monetary policy plays a major role behind exchange rate moves. Abe also said he will consider revising Bank of Japan laws to ensure its independence. It's also reported that Abe is close to choosing the next central bank governor to replace Shirakawa on March 19 and former Bank of Japan Deputy Governor Muto is the front-runner, while another former Deputy Governor Iwata is a close alternative. Muto is generally seen as the least dovish and least aggressive candidate. In Europe, Bundesbank head Weidmann said that the G20 leaders were in agreement that politically driven devaluations can't sustainably improve competitiveness, don't solve structural problems and produce backlash reactions, and the clear language in the communiqué underlines this unity. He expressed the concern on creeping politicization of central banks. He also noted that the euro's strength is one factor among many in determining future inflation rates, and it's not justifiable from the European Central Bank to make any monetary policy decision with one single factor. Fed Chairman Ben Bernanke noted last Friday that, with unemployment at almost 8%, we are still far from the fully healthy and vibrant conditions that we would like to see. He said that, by strengthening the U.S. economy we are helping to strengthen the global economy as well. And the Fed would continue to provide accommodative monetary policy in our effort to foster maximum employment and price stability. Latest CFTC data showed that on February 12 there was a sharp deterioration in Aussie and sterling positions compared to the prior week. Meanwhile euro longs receded mildly with euro net longs dropping to 24,000 contracts, down from 38,000 in the prior week. Yen net shorts dropped to 61,300 compared to 68,400, but that could be merely a repositioning ahead of the G20. Sterling turned net short for the first time since last September. Traders are net short 16,800 contracts compared to 1,200 net longs the prior week. It should be noted that the data was up